This podcast contains content generated or significantly edited using artificial intelligence tools. All information is provided for general informational purposes only and reflects knowledge available at the time of publication. It does not constitute financial, investment, or legal advice. We recommend that listeners verify the information independently and consult with qualified professionals for personalized advice.
Welcome to the Luxembourg Funcast.
Oh.
Okay, buckle up, everyone. We're about to dive pretty deep into something that, well, might sound a bit dry on the surface, legal opinions in Luxembourg.
Mm-hmm.
But honestly, if you're navigating the Lux financial scene or corporate deals or you're in compliance, this stuff is absolutely fundamental. It really supports so much of the critical transaction work here.
It really does. Legal opinions are, well, a foundational element. They help facilitate these complex, often cross-border deals that Luxembourg is known for.
Right.
They provide that essential legal certainty parties absolutely need to, move forward with confidence.
So we've basically taken this pile of source material that you, our listener, shared because you need to get a proper handle on this key part of the landscape.
That's the plan.
And our mission today is pretty straightforward. Take these sources, pull out the really essential nuggets about Luxembourg legal opinions, make the complex bits clearer, and highlight what's most impactful for you. We're going to try and use that 5 W's and H framework.
Good framework. Who, what, when, where, why, how.
Exactly. Covering all those angles as we explore the material. So let's jump right in then. What exactly is a legal opinion when we talk about Luxembourg? Sounds formal, obviously, but what's its core identity?
Okay. So at its core, you can think of it as a formal written statement. It comes from a lawyer or a law firm.
Right.
And it gives their professional judgment, their expert view on specific legal issues. These issues could relate to a transaction, maybe an entity involved, or some specific matter they've been asked to look at.
Professional judgment.
Yes, and this is really, really crucial to grasp. It's an informed assessment. It's based on the lawyer's understanding of Luxembourg law as it stands on the exact date the opinion is given.
Okay, so point in time.
Precisely.
Yeah.
And it's strictly based on the specific documents and facts they've been given. It is absolutely not a guarantee of how things might turn out later, say, in court.
Got it. Assessment, not guarantee. Big difference.
Huge difference. That distinction is vital.
So if it's not a guarantee, what's the actual point? Why get one in a deal? What's its utility?
Well, its purpose is multifaceted. Firstly, it serves as a formal confirmation of key legal points.
Like what?
Like, for example, confirming that a Luxembourg company involved has the necessary corporate power, under its own articles in Lux company law, to actually sign the deal documents and perform its obligations.
Okay, basic but essential.
Very. Secondly, they're really significant risk management tools. The whole process of getting an opinion often brings potential legal risks to the surface.
Things you might miss otherwise.
Exactly. And sometimes, just needing to get a clean opinion one without major issues flagged actually pushes the parties to tweak the deal structure or amend the documents before closing to fix those risks.
Interesting. So it can shape the deal itself.
It can. And thirdly, and this is very common in practice, they function as conditions precedent. Meaning the main deal agreement says the transaction legally cannot close until a satisfactory legal opinion has been delivered to the party who needs it, like a bank lending money or an underwriter selling bonds.
That makes total sense.
Yeah.
You want that legal sign-off before the money flows or the deal completes.
Yeah.
So who are the usual suspects relying on these, and why is it so critical for them?
Okay, so a whole range of players rely on them, each for their own specific reasons. Lenders and investors are definitely major users.
The money people.
Right. They need assurance on the borrower's or the issuer's capacity and authority. They need confirmation the deal docs are valid under Luxembourg law. And maybe most importantly, they often need opinions on the enforceability of things like security interest pledges over shares or bank accounts, for example, granted by the Lux entity.
Makes sense. They want to know their collateral is solid.
Absolutely. Then you have transaction counterparties.
Mm-hmm.
Think of the buyer in an M&A deal.
Okay.
They'll rely on opinions to confirm the legal status of the other parties and the overall legal health of the transaction from a Luxembourg perspective.
Right. Check everyone's properly set up.
Exactly. And interestingly, we're seeing regulatory bodies in Luxembourg increasingly step in and require legal opinions for certain things.
Oh, yeah. Like who?
Well, a really current and major example is the CSSF, the financial regulator here.
Mm-hmm.
They now require legal opinions for issuers of asset reference tokens, or ARTs, who are seeking authorization under that big new EU regulation, MiCAR.
Okay, so the regulator is mandating them in new areas.
Precisely. And even the entities themselves, the company issuing bonds or taking the loan, might get opinions to understand their own position better, or maybe satisfy their auditors or internal governance needs.
So it's about providing comfort and certainty all around. Now, you mentioned the term avis juridique earlier. How does that fit in? Is it the same thing?
Good question. It needs clarification. Avis juridique just translates to legal opinion or legal advice. But in official Luxembourg context, like on the government's legislative website, Legilux, it's used more broadly.
Broader how?
It might refer to legal advice given during the lawmaking process itself to the government or parliament, or opinions needed for various administrative steps or regulatory filings that aren't purely transactional in the way we're mostly talking about.
Can you give an example?
Sure. The insurance regulator, the CAA, might require un avis juridique d'un autre document probant, basically, a legal opinion or some other strong proof to certify that a foreign insurance company's planned activities here comply with local law. The CSSF's MiCAR opinion requirement is another example of this regulatory use. But the term avis juridique itself definitely covers more ground in Luxembourg's official system than just the formal, internationally influenced transactional opinions we're focusing on.
Got it. So for this deep dive, when we say legal opinion, we're really zeroing in on those formal transactional ones used in finance and corporate deals, the ones with that specific structure and purpose shaped by international market practice.
Exactly that. That's our main focus.
Okay, now this next bit I found really fascinating in the source material. It talks about legal opinions in Luxembourg being a kind of common law transplant into a civil law system. What does that actually mean? How did a practice from, say, the UK or US take root so strongly here?
It's a great way to put it. It means that the practice of issuing these very detailed, structured, formal legal opinions, especially the kind you see in complex international finance, didn't really grow up organically from Luxembourg's own historical civil law traditions.
Unlike in the UK or US, where it's just how things are done.
Exactly. In common law systems, it's deeply embedded. Here, it was largely imported, or as the term suggests, transplanted. And this isn't just our observation. It's something discussed in Luxembourg legal scholarship by groups like the ALJB, which focuses on banking law.
So what's a legal transplant generally?
It's just the idea of legal rules, concepts, or even institutions moving from one legal system to another. In this case, the formal opinion practice, especially in high-end finance, was brought over mainly from the UK and US traditions.
Okay, but why? Why did Luxembourg adopt this?
Well, it was fundamentally driven by the needs and expectations of the international players doing business here. Global banks, big international law firms, and their multinational clients dealing with Luxembourg entities in cross-border transactions.
They were just used to getting these opinions elsewhere.
Precisely. They expected them. They needed them for their standard due diligence, for managing legal risks, and frankly, just for comfort, because that's what they were accustomed to in common law markets or when dealing with counterparties from those markets.
So, as Luxembourg grew as a financial hub,
it became essential to facilitate that global business, attract international investment, and make sure Luxembourg's legal practices were aligned with international standards. Adopting this practice was key.
Makes sense. Keep pace with the market.
Exactly. And this really accelerated over the last few decades, kind of in parallel with the huge growth of the investment fund industry and Luxembourg's broader role in international finance and corporate structuring.
So what specific features in a typical Lux opinion scream common law influence?
You see it quite clearly in the structure and the content. For instance, the heavy emphasis on having detailed sections laying out all the assumptions the lawyer is making and all the qualifications or limitations to the opinion that's very characteristic of the common law style.
Okay, those sections we'll dig into later.
Yes. Also, the strong focus on opining specifically on the capacity and authority of the entity, the due execution of documents, and the enforceability of obligations. These are all core concepts heavily emphasized in common law opinions.
And where they're used?
Well, their widespread use as conditions precedent in standard international agreements, big syndicated loans, bond issues, M&A deals. That's a direct import from common law deal structures. You see them most prominently in banking, finance, fund structuring, and major cross-border M&A.
But Luxembourg is still fundamentally a civil law country, right? Based on codes, statutes.
Absolutely. Firmly civil law.
So how does this common law style of opinion fit in? Does it clash with the local framework?
That's where the delicacy of the transplant, as the source called it, comes in. It's a crucial point. While the external form, the structure, and the overall function draw heavily from common law, the actual legal analysis inside the opinion is entirely rooted in Luxembourg law.
So the substance is pure Lux law.
Pure Luxembourg law. The lawyer writing it is applying and interpreting Luxembourg statutes, the civil code, company law, financial sector laws, everything on Legilex.
Right.
And interestingly, there isn't a formal codified definition of a legal opinion as a distinct legal instrument in the Luxembourg Civil Code itself, unlike, say, a specific type of contract.
So where does its authority come from?
It comes from a combination of things. The professional responsibility rules for Luxembourg lawyers, established market practice everyone expects and accepts them, and, as we saw with MiCAR, increasingly from explicit regulatory requirements in specific areas.
And what about case law? Civil law usually relies less on precedent than common law.
That's another interesting aspect of the adaptation. Luxembourg, like other civil law systems, traditionally emphasizes statutes over case law or jurisprudence. While courts do create jurisprudence, it's not always published or followed with the same binding systematic weight as in common law. The fact that this common law-style opinion practice, which often grapples with nuances that might be clarified by case law elsewhere, has been so successfully integrated here is quite remarkable. It shows real adaptation.
So definitely not just copied, but adapted. You use the source's term, delicate transplant. What does that delicacy really involve in practice?
Delicate transplant really captures it well. It's not a simple cut and paste. It's a careful, nuanced adaptation. Luxembourg opinions use an international format and serve a purpose familiar to common law users, but they are fundamentally instruments of Luxembourg law. They're drafted, interpreted, and applied by lawyers qualified here, based on Lux legal principles.
And the delicacy is bridging the two worlds.
Exactly. It's bridging the expectations of international clients who often think in common law terms with the specific concepts, nuances, and sometimes different approaches of the Luxembourg civil law system.
Like how?
Well, for example, the concept of enforceability of a contract might be approached or qualified slightly differently under civil law principles compared to common law. The opining lawyer has to navigate that.
So the outside looks familiar internationally, but the engine inside is pure Luxembourg.
That's a great analogy. The external structure and function are heavily common law influenced, but the internal logic, the legal foundation, the analysis that's unequivocally Luxembourgish, grounded in its statutes and shaped by local regulation and practice. #tag IC key contexts requiring legal opinions in Luxembourg.
Okay, understood. We know what they are, how they got here, this blend of influences. Now, let's get practical. Where do we actually see these opinions in action? What are the typical situations, the deals where you'd absolutely expect to need one?
Right. They are really woven into the fabric of significant financial and corporate transactions involving Luxembourg. Let's run through the key context, maybe hitting those 5 W's and H points where relevant. First, and maybe most prominently, financial transactions.
Banking, loans, bonds.
Exactly. Who typically asks for them here? It's primarily lenders, think commercial banks, debt funds, bondholders, or the security agents acting for them.
Makes sense. Why do they need them?
Several key reasons. To confirm the Luxembourg borrower or guarantor has the proper corporate capacity and authority to enter the deal. To confirm the documents were duly executed, and very importantly, to get comfort on the validity and perfection of any security interests granted under Luxembourg law like pledges and their enforceability. This often involves checking against the Luxembourg law of 5 August 2005 on financial collateral, which is a cornerstone piece of legislation here, known for being robust and creditor-friendly.
Okay. When in the deal timeline?
Almost always as a condition precedent, meaning before the first chunk of money is lent or before the bonds are officially issued and sold.
Can't proceed without it.
Generally not. What documents do they cover? The core deal agreements, the loan agreement itself, security documents like pledges, assignments, maybe mortgages, and any guarantees.
And where do we see these financing opinions most often?
They're standard in cross-border lending, domestic corporate loans, project finance, acquisition finance where debt is used, and securitization structures.
And how does the lawyer form the opinion?
Through a really thorough review of the final transaction documents, the Lux entity's corporate authorizations like board minutes, and analyzing how it all stacks up against relevant Luxembourg law.
Got it. So major financings involving Lux entities or assets. What about corporate deals like mergers?
Definitely. Corporate restructurings and mergers and acquisitions, M&A, are another big area.
Who needs them there?
Typically the acquirers, sometimes the sellers, or the specific entities involved in a complex merger or demerger.
And why? What are they confirming?
Things like confirming the Luxembourg target company was properly incorporated and is in good standing, confirming it has the corporate capacity to go through with the deal, maybe confirming the validity of share transfers under Lux law or compliance with specific merger regulations.
And when? Again, usually at closing.
Yes, usually a condition precedent to closing the M&A deal or making the restructuring legally effective.
Okay. And capital markets. Issuing shares, bonds to the public.
Yes, capital markets and securities offerings are another classic context.
Who relies on them?
Underwriters, the lead managers arranging the deal, institutional investors, and the stock exchanges themselves, particularly the Luxembourg Stock Exchange, the LuxEE, which is a huge venue for international listings.
And why? What's the focus?
Confirming the issuer's capacity to issue the securities, confirming the securities themselves are duly authorized and validly created, opining on compliance with prospectus rules under EU and Lux law, and satisfying listing requirements.
When is this needed?
Usually required just before the public offering launches or the securities are officially admitted to listing and trading.
And what docs are covered?
The prospectus are offering circular underwriting agreements, trust deeds if applicable, and the terms and conditions of the securities themselves. And actually, there's a really interesting recent development here showing adaptation. The LuxEE has indicated it may require an independent legal opinion for DLT financial instruments.
So tokens issued on a blockchain.
Exactly. If they're seeking registration on the LuxEE's securities official list, the SOL, the opinion would need to confirm that the instrument legally qualifies as a security under its governing law.
Wow, so opinion practice is directly responding to things like tokenization.
Absolutely. It has to.
You also mentioned regulators explicitly requiring them. That seems like a big shift.
It was significant. So regulatory requirements are an increasingly important driver.
Especially from the CSSF.
Yes. The standout example right now is definitely under MiCAR for those asset reference tokens, ARCTs.
You mentioned this earlier. Can you recap the specifics?
Sure. MiCAR itself, in specific articles, mandates that RT issuers seeking authorization from the CSSF must submit a legal opinion.
And why this specific requirement? What must the opinion say?
It has a very precise job. It needs to attest that the ARTs being issued don't fall into certain categories excluded from MiCAR, and critically, that they don't qualify as e-money tokens. It's about proper classification right from the start. And the CSSF built on this with their Circular 25890 effective May 2025, setting out detailed content and format rules for these opinions, implementing EU-level guidelines.
So very targeted regulatory use. Any other examples?
Well, in the insurance sector, the CAA requires an opinion or similar proof for cross-border firms to show their planned activities comply with host country law. And even historically, you can find older Eurosystem documents outlining opinion requirements for participants in major payment systems under EU directives, showing this isn't entirely new and regulated infrastructure.
Okay. And finally, what about the massive funds industry here?
Right. Fund structuring and operations is the last key context.
Who asked for opinions there?
Fund promoters setting up the fund, the alternative investment fund managers, AIFMs running it, depository banks holding the assets, and sometimes large institutional investors coming in.
And why? What are they confirming in the fund world?
Opinions might cover the fund's due incorporation and its specific regulatory status, like confirming it meets UCI's or AIFMD requirements. They might cover the validity of the offering documents, the prospectus or PPM, or sometimes they're needed for complex transactions the fund itself enters into.
So it really feels like these opinions are threaded through almost every significant financial and corporate activity that touches Luxembourg. Looking across all these different contexts, what really jumps out at you as a key takeaway?
What truly stands out, I think, is that increasing trend of regulators explicitly mandating opinions. Market practice and counterparty demand have always been there, especially in traditional finance. But things like MiCAR show regulators now see opinions as a formal tool in their own oversight toolkit.
Especially for new stuff like crypto.
Exactly, particularly in new tech-driven areas. It formalizes the opinion's role, elevates its importance from a regulatory viewpoint, and inevitably increases the scrutiny on what these opinions actually say. I really expect this trend of regulator-mandated opinions to continue as finance keeps evolving. #2. The anatomy of a Luxembourg legal opinion.
Right, that makes sense. So we know why they're needed, where they pop up. Let's actually dissect the document itself. If you get a Luxembourg legal opinion, What does it typically look like? What are the main sections, the key parts you need to understand?
Okay. The structure is fairly standard, and as we discussed, it definitely shows that common law influence. Let's break down the core components you'd expect to find. It starts, logically enough, with the addressee.
Who it's for.
Precisely. It clearly states who the opinion is addressed to the party or parties who requested it. And crucially, there's almost always very clear language saying that only those named addressees can rely on it.
Why is that?
It's standard practice globally for law firms. It limits their potential professional liability. They don't want unknown third parties trying to rely on advice given in a specific context to someone else unless they give explicit written consent beforehand.
Okay, liability management makes sense. What's next?
The date. The opinion has a specific date, and it explicitly says the legal judgments are valid only as of that date.
That point in time thing again.
Exactly. And there's always a standard disclaimer saying the firm has no obligation to update the opinion if the law changes or facts change after that date.
So it's a snapshot.
A snapshot. Then you have a scope or purpose section. This clearly defines the specific transaction or matter the opinion relates to. It sets out the particular Luxembourg legal issues the lawyer was asked to address.
Defines the playing field.
Yes. Following that, a very important section, the list of documents examined. It's a detailed, comprehensive list of every single document the lawyer reviewed to form their opinion. This is critical because it defines and limits the factual basis of their work. You often see examples of these long lists in public filings, like those made to the SEC for international deals involving Lux companies.
That's the factual boundaries.
Exactly. Now we get to two absolutely critical sections, probably the most important to understand together: assumptions and qualifications.
Okay, let's take assumptions first. What are they and why are they so crucial?
Right. Assumptions are statements about facts or sometimes about legal points outside the scope of the opinion, like foreign law, that the opining lawyer assumes are true and correct without independently verifying them.
So things they take as given.
Exactly. Things taken as given to make the opinion process workable.
What kind of things? Give me some common examples.
Sure. Very common ones include assuming all signatures, stamps, and seals on the documents are genuine. Assuming original documents provided are authentic, and any copies are true and complete copies. You see this boilerplate all the time in those SEC filing examples.
Okay.
They assume the transaction documents were properly authorized, signed, and delivered by all the parties other than the Luxembourg entity the opinion is about.
Why only the others?
Because the opinion is there to confirm the Lux entity's actions, so they can't just assume that part.
Oh, right.
They also typically assume the entity being opined on is solvent. They assume no foreign law would mess up the opinions given under Luxembourg law. And they often assume factual statements made within the documents they reviewed are true, unless it's a fact they're specifically opining on. Again, look at public SEC filings. You'll see this standard language repeatedly.
So who puts these assumptions in?
The opining lawyer includes them.
And why? Is it just to limit their work?
Partly, but it's mainly for practicality. It's just impossible or impractical for a Lux lawyer to verify every single fact independently, like the internal company decisions made by a counterparty in another country or their financial health. Assumptions define a reasonable scope for the investigation.
And where do they sit in the doc?
They form a foundational basis, listed in their own dedicated section, usually drafted using standard market practice phrases, but tailored slightly if needed for the specific deal. Those SEC examples show how standard they are.
Okay, so assumptions set the factual stage. What about qualifications? How are they different?
Qualifications are the other side of the coin, equally crucial. These outline general principles of Luxembourg law or specific circumstances that might limit or affect the legal conclusions given in the main part of the opinion, especially regarding enforceability.
So they're like caveats. Our opinion holds unless.
Kind of. They're acknowledging inherent limitations in the law or its application.
What are common qualifications then?
Very standard ones relate to the potential effects of Luxembourg bankruptcy, insolvency, liquidation, moratorium, or controlled management laws. Basically, any law that generally affects creditors' rights in an insolvency situation. These are almost always there. You see them constantly in SEC examples.
Makes sense. Insolvency changes the game.
Always. Other common ones relate to general principles of equity or fairness applied by courts, specific procedural requirements needed to enforce rights, limitations on getting specific performance instead of just damages, the overriding concept of Luxembourg public policy, or public, which can void clauses violating fundamental principles, and potentially the effects of relevant foreign laws if the opinion is strictly limited to Lux law. Again, many examples in public SEC filings.
And who states these? The lawyer again?
Yes, the opining lawyer includes them.
Why? To avoid being misleading.
Exactly. It ensures the opinion isn't read as being absolute when the law itself has built-in limitations or practical enforcement challenges.
And where do they apply?
They apply directly to the operative opinions, the main conclusions. They're usually in their own section based on established legal principles and any specific issues the transaction throws up.
Okay, so assumptions are the input, qualifications are the limitations. What's the bit in the middle? The actual opinion.
Exactly. The heart of the document. The operative opinions, sometimes called the opinion proper.
This is the core conclusion.
Yes. These are the carefully worded, precise legal conclusions the lawyer reaches on the specific points the addressee asked for.
Give me examples, maybe ones you see in those SEC filings.
Sure. Typical operative opinions you'll see confirmed include that the Luxembourg entity, say a company or a fund, is duly incorporated and validly existing under Lux law, that it has the necessary corporate power and authority to enter into the transaction documents and perform its obligations, that those documents have been duly executed and delivered by the Lux entity, and, crucially, that the entity's obligations under those documents are valid, binding, and enforceable, though this enforceability part is nearly always stated as being subject to the governing law of the documents and absolutely always subject to all the qualifications we just discussed.
Right, never absolute enforceability.
And never absolute. And where security is involved, opinions will cover the validity and perfection of those Lux security interests, often referencing the effectiveness of the 2005 collateral law.
And who provides these core statements?
These are the opining lawyer's main professional judgments based on all their analysis.
Why are they there? That's the bit the recipient relies on.
Exactly. This is the substantive legal assurance the recipient is paying for and relying upon.
And how do they fit in the structure?
They're the culmination of the whole review process. They sit in the central section, clearly based on the documents examined and the assumptions made, and always explicitly subject to the qualifications listed. And just to add, it's quite common practice here in Lux and elsewhere in Europe to split opinions.
Split them. How?
So the lawyer for the entity being opined on, say, the borrower's lawyer might give the opinion on its corporate existence, power, authority, due execution. Then the lawyer for the party receiving the opinion, like the lender's lawyer, might give a separate opinion focusing perhaps on enforceability, especially if the main deal docs are governed by foreign law but involve Lux security or parties. This split is very standard.
Okay. Any other bits of the opinion structure?
Usually a section specifying the governing law of the opinion itself, typically stated as Luxembourg law. It might also specify Lux court jurisdiction for any disputes about the opinion, again visible in SEC examples. And often there's a final section with reliance limitations, just hammering home again that only the named addressees can rely on it.
Wow. It really sounds like you cannot just read the operative opinion sentence in isolation. You absolutely have to read it alongside the assumptions and qualifications to get the real picture.
You absolutely must. Understanding that interplay is critical. The assumptions set the factual and legal baseline the lawyer worked from. The operative opinions are given based on that assumed reality, and the qualifications then refine or limit the scope of those opinions by flagging legal limitations or potential issues.
Can you give a quick example of that interplay?
Sure. The lawyer assumes signatures are genuine, assumption. Based on that, they opine the document was duly executed, operative opinion. But then they state, this is subject to the effects of insolvency laws, qualification. You have to read all three together. That interplay is a real hallmark of the common law style that's been adopted here. And just briefly, we should mention reasoned or explanatory opinions.
What are those?
Sometimes the legal issue is too complex, new, or uncertain for a simple yes or no confirmation. In those cases, a reasoned opinion might be given. It includes more detailed legal analysis, discusses the arguments, maybe concludes on more likely than not basis.
Not a clean yes-no.
Exactly. And actually, that CSSF requirement under MiCAR for an explanation alongside the opinion on crypto classification, that leans towards this reasoned approach, given how new it all is.
So, thinking about this whole process, does getting a legal opinion ever actually force changes to the underlying deal documents themselves? Or is it purely a review after the fact?
Oh, absolutely. It can force changes. It's definitely not just a passive check at the end. It often functions as a crucial quality control step during the drafting.
How so?
Well, think about it. Luxembourg law and regulations change. We just talked about MiCAR, DORA, ESG rules are coming in.
Right.
These changes directly affect what a lawyer can comfortably opine on. An opinion needs to confirm compliance with the law as it stands now.
And if the documents don't reflect the new law?
Then the lawyer might not be able to give a clean opinion. And because getting that satisfactory opinion is usually a condition precedent to closing the deal.
It forces the parties to update the documents.
Exactly. It drives changes. Standard clauses, representations, warranties, covenants and loan agreements, disclosures and prospectuses might need updating to reflect new legal obligations imposed by Luxembourg law. This has to happen so that the lawyer can then issue the required clean opinion.
Can you give an example?
Sure. Imagine a new CSSF circular comes out mandating specific new risk warnings in a certain type of fund prospectus.
Okay.
Any legal opinion on that prospectus would need to confirm those warnings are included. That means the prospectus must be amended first to add that language. Only then can the lawyer sign off.
So who flags these necessary changes?
The opining counsel plays a key role here. During the negotiation and drafting of the main deal documents, they'll spot potential issues under Luxembourg law that could prevent them giving the required opinion later.
And they tell their client or the other side?
Yes, they flag it. They'll say, look, based on this new regulation or this interpretation, we won't be able to give a clean opinion on Clause X unless you amend the underlying document to reflect Y. This often happens interactively while the main agreements are still being negotiated, especially when dealing with recent or upcoming legal changes.
What kinds of documents get amended most often because of this?
Loan agreements, security documents, articles of association of the Lux entity, offering circulars, prospectuses, terms and conditions of securities, basically any core legal document underpinning the transaction that touches on areas covered by the opinion.
So the opinion isn't just a rubber stamp at the end. It's more like an active quality control check that helps ensure the underlying deal is legally sound and up to date.
That's a perfect way to put it. The fact that the opinion is usually a condition precedent creates a powerful incentive for everyone involved to get the documentation right.
Because otherwise the deal stalls.
Exactly. Parties need the deal to close. Lawyers managing their own liability are hesitant to issue clean opinions on documents they see as flawed or non-compliant.
So everyone's interest aligns towards better docs.
Broadly, yes. The requester, like the lender, wants solid documents for their own protection. The provider, whose counsel gives the opinion, like the borrower, needs the documents to be satisfactory so the opinion condition can be met. It becomes an interactive process, not just a passive review, and it genuinely drives improvements in legal drafting and transaction structuring in Luxembourg.
Okay, this is making a lot more sense now. We know what they are, what's inside them, how they can even shape the deal docs. But how does the whole process actually kick off and play out in real time? How does an opinion go from just an idea to a signed document delivered at closing?
Right, the life cycle. It starts, logically, with the request. Someone needs the legal assurance.
Who usually makes the request?
As we discussed, typically the party taking on risk or needing comfort. Lenders, underwriters, investors, acquirers, or increasingly it's triggered by a regulator like the CSSF under MiCAR.
And who provides it?
It has to be a law firm with lawyers qualified to practice Luxembourg law.
Okay. And choosing the law firm you mentioned, opinions are often split.
Yes, that's a common early consideration. As we noted, it's standard practice in Lux and Europe for the entity's own counsel, say the borrower's lawyer, to opine on its corporate status, capacity, authority. And then the recipient's counsel, say the lender's lawyer, might give a separate opinion, perhaps on enforceability, especially if foreign law governs the main contract, but Lux security is involved. That choice of who opines on what is sorted out early on.
When does this request usually happen in a deal? Right at the end.
Oh no, usually much earlier. Discussions about needing an opinion and its likely scope often start during the initial structuring or due diligence phase.
Why so early?
To identify potential legal roadblocks early on, or simply because everyone knows it will be a formal closing condition later, so they start thinking about it from the outset.
What actually triggers the need for one? Is it automatic for certain deals?
Often triggered by the nature of the transaction. If it's cross-border complex, involves a regulated sector, or a counterparty might just demand it as part of their standard risk policy. And then there are those explicit regulatory mandates like CSSF stated for MiCAR art issuers.
And the timing within the deal flow runs in parallel.
Yes, the opinion process usually runs in parallel with negotiating the main transaction documents. Drafts of the opinion get circulated, lawyers comment back and forth. The final signed opinion is then typically delivered right at, or maybe the day before, the actual closing.
How was the scope decided? Just standard stuff?
It starts with market standards for that type of deal, but it's refined through discussion and negotiation. The requesting party's lawyers talk to the opining firm's lawyers. They tailor it to the specific risks and legal questions of that particular transaction. The opining counsel plays a key role here, advising on what can realistically and properly be opined on under Luxembourg law within the opinion format. Hashtag tag 3B negotiation aspects.
Wait, negotiation. You mentioned negotiation again.
Yeah.
I kind of pictured these opinions as fairly standard legal forms once the scope is set. What exactly is there to negotiate?
That's a common misconception. While there are definitely standard elements in boilerplate language, the content of legal opinions is frequently negotiated, sometimes quite intensely.
Really? Why?
Because it's a critical part of agreeing the precise level of legal comfort being provided and essentially allocating risk between the parties. It's not just ticking a box.
Okay, so what specific parts get debated?
Several key areas are typically negotiated back and forth between the lawyers. The exact scope. Which precise legal issues? Which specific entities? The assumptions. The recipient's lawyers might push back, saying an assumption is unreasonable or the opining firm should verify something instead of assuming it. They want to narrow the assumptions to strengthen the opinion.
Makes sense.
The qualifications. This is often the biggest battleground. The recipient wants the fewest, narrowest qualifications possible to get maximum assurance. The opining firm needs to include qualifications that accurately reflect legal limitations. So there's push and pull on their breadth and applicability.
Okay.
The wording of the operative opinion statements. Even small tweaks in phrasing can change the meaning or level of comfort. Lawyers negotiate the precise language on capacity, validity, and enforceability very carefully. Sometimes materiality thresholds might be debated for opinions on compliance, for instance. And maybe the scope of knowledge qualifiers opinions sometimes say to our knowledge, and what that actually means can be discussed.
Who's involved in these debates?
Just the lawyer. Primarily, yes. It's lawyer for the opining firm versus lawyer for the recipient. Business people might get involved if there's a major sticking point with commercial consequences, but usually it's a legal discussion.
And why all this negotiation? If the law is the law.
Because opinions are risk allocation tools. The recipient wants the broadest comfort to minimize their legal risk. The opining lawyer needs absolute accuracy under Lux law and must manage their firm's liability. They can't just say whatever the recipient wants if the law doesn't support it.
It's a tension.
A definite tension. And while some sources mention a perception that Lux legal advice can seem uncertain in these talks, especially from a common law view, the process leads to precision. The existence of reasoned opinions for tricky issues shows this adaptation happens. Plus, in areas like fund finance, the source notes the very structure of assets can influence the opinions lenders demand, making negotiation inevitable from the start.
How are these points usually resolved?
Throughout the drafting process, alongside the main deal docs, resolution comes through legal argument, finding compromise language, pointing to market practice on similar deals, or occasionally needing to change the underlying transaction structure slightly to fix a legal issue preventing a clean opinion.
So even though parts look like boilerplate, like those SEC examples, the negotiation makes each opinion quite unique to its deal.
Exactly right. While you see standard boilerplate for assumptions and qualifications everywhere, the negotiation highlights the bespoke nature. Every deal is different structure, parties, assets, risks. The recipient pushes for maximum comfort. The lawyer has to limit it to what's reasonably openable under Lux law, protecting their firm. This tension drives the detailed negotiation. It's a critical part of the overall deal negotiation, reflecting how risks are being allocated, not just a formality. Hashtag 3C, timelines for issuance.
All right, so the negotiation is key, not just boilerplate. But once that's done, how long does it actually take to get the final signed opinion delivered? Is there a typical time frame we should expect?
That's a tricky one. Timelines for issuing opinions can vary. Well, significantly. There's really no single fixed standard or legally set deadline for these typical transactional opinions.
So it depends.
Pretty much. Several factors really influence how long it takes.
Like what?
The complexity of the transaction is a big one. If it's a highly structured deal, involves novel legal questions, or spans multiple countries, the analysis, research, and drafting just take more time.
Makes sense.
The completeness and timeliness of the documentation is absolutely crucial. The lawyer needs all the necessary docs, corporate records, board minutes, signed deal agreements to do their work. If those are delayed,
The opinion gets delayed.
Exactly. Delays there directly translate. The responsiveness of everyone involved, the client, other lawyers, administrators, and providing info or confirmations matters too.
Okay.
The scope of the opinion and how much negotiation was needed also impacts the timeline. Broader scope, more arguments, more time. If it's a multi-jurisdictional deal, the Luxembourg opinion might need coordination with opinions from other countries, which adds complexity and potential waiting time. And let's be honest, the opining law firm's workload at that moment plays a part too.
Okay. So how's the timeline managed?
It's usually a collaborative effort. The lead lawyers on the deal coordinate with the opining counsel to try and keep things on track for the target closing date.
And delivery is usually right at closing.
Typically, yes. It's a condition precedent, so it's delivered at or maybe the day before closing. But there can be specific exceptions. For example, the source mentioned that for certain capital markets deals, like issuing NGNs settled through ICSDs like Euroclear,
The big settlement systems.
right, opinions confirming validity might be needed at least 2 business days before the issue date. Gives the system and participants time to get comfortable before settlement.
Do official sources say how long it should take?
No, official Luxembourg sources don't prescribe timelines for these transactional opinions. Market expectation really varies based on all those factors. For something straightforward, standard docs, maybe a few days to a week. For complex international deals or cutting-edge legal issues, it could easily be several weeks.
Just for context, how does that compare to other legal timings?
Well, it's very different, but just as a rough comparison, getting a first instance court judgment in a standard civil case here might take 12 to 30 months. It just shows formal legal processes take time.
Okay. So opinions are faster than litigation, but still variable.
Yes, and there's often that just-in-time dynamic. Opinions are frequently finalized last because they depend on the final signed versions of the main deal documents.
Can't sign off until the underlying docs are fixed.
Exactly. So delays in finalizing the main agreements, getting info, or resolving opinion negotiation points directly hit the closing schedule. Good project management and engaging the opining lawyers early are really key to avoiding last-minute scrambles. Hashtag 3D cost considerations.
Okay, timelines depend on complexity and process. Let's talk money. What determines how much one of these legal opinions actually costs in Luxembourg?
Right, cost. The fee is basically set by agreement between the client and the law firm. Unlike some other legal services, maybe elsewhere, Luxembourg does not have a mandatory official fee scale that lawyers have to follow for transactional opinions.
So it's negotiable. What influences the price?
Several things heavily influence the fees. The biggest factor is usually the time spent by the lawyers and their teams. The total hours logged by partners, associates, paralegals doing document review, legal research, drafting, revising, negotiating. That's often the main driver. Billing by the hour is very common.
Okay, time is key.
Then there's the complexity and importance of the matter. More complex deals, higher stakes, novel legal issues. These need more senior expertise, deeper analysis, and naturally command higher fees.
Expertise costs more.
It does. The experience and reputation of the lawyer or firm also plays a role. Specialists or top-tier firms might have higher rates reflecting their expertise and market standing. Urgency can affect costs too. If you need it done yesterday, that might involve premium rates for expedited work.
Right.
A really important point. Outcome-based fees, where the fee is purely a percentage of the deal value or outcome known as pactum de quodlibet, are strictly prohibited for Luxembourg lawyers. Fees generally have to relate to the work done.
Got it. No contingency fees for opinion.
Correct. And finally, you have expenses and VAT. The client usually covers out-of-pocket costs the firm incurs, like fees for searching the LBR register, courier charges, etc. And then VAT, currently 17% on most Lux legal services, is added on top of the professional fees and eligible expenses.
Okay. Who usually pays the bill? The entity getting the opinion.
It depends on the deal structure and what's agreed. In financing deals, it's very common for the borrower to pay for the opinion from their own counsel and also cover the cost of the lender's Luxembourg counsel's opinion, particularly the one on security enforceability.
So borrower pays both sides sometimes.
Often, yes. In capital markets deals, the issuer typically pays for all the opinions needed for the offering and listing.
So the cost isn't just about how many pages the final opinion document has.
Definitely not. While time spent is key, the cost really reflects the underlying risk, the complexity, and the expertise required. An opinion on a highly structured, multi-jurisdictional deal, or something involving brand new tech like DLT, needs more senior lawyer time, potentially extensive research into uncharted areas, and carries greater potential professional liability for the firm.
So a short opinion on something really tricky could cost more than a long one on something simple.
Absolutely. The fee covers the depth of analysis, the specialist knowledge, and the professional responsibility the firm takes on by signing that opinion. It's always best practice to have an open discussion early on with the lawyers about the likely scope, the process, and the estimated fees to avoid surprises. #/#550. Recent developments and future outlook.
Okay, this is great context. Now let's shift to what's happening right now and looking ahead. What recent changes in Luxembourg's legal or regulatory world are actually impacting how legal opinions are done today?
Things are definitely moving, especially in finance. Several key developments over the last year or so are shaping opinion practice. A huge one is the full arrival of MiCAR and the related CSSF guidance. The Markets in Crypto Assets regulation started applying for ART and EMT issuers in June 2024 and hits other crypto players from December 2024. Luxembourg officially named the CSSF as the competent authority back in February 2025.
And the direct impact on opinions.
Is that MiCAR mandates those legal opinions for RT issuers seeking authorization, as we discussed. And the CSSF's Circular 25890 from April 2025, effective May 2025, gets very specific. It implements EU-level guidelines on the templates and methods for these opinions, including a standard classification test. So lawyers now have detailed instructions from the CSSF stated requirements on what these MiCAR opinions need to contain and look like. The EU guidelines also hinted more opinions might be useful for other crypto types, so it's an evolving space.
Okay, MiCAR is a big one. What else?
A really important clarification came from the Luxembourg Supreme Court in December 2024 on the 2005 collateral law. The Cour de Cassation overturned a lower court decision.
What did it clarify?
It confirmed that the strong safe harbor protections in that 2005 law have a global scope. They aren't just limited to the European Economic Area. This was a big point of discussion in early 2025.
And the impact on opinions.
It significantly boosts legal certainty for opinions on the enforceability and insolvency protection of Luxembourg security, especially in international deals with non-EEA parties or assets. It strengthens the hand of secured creditors relying on Lux collateral.
Good news for lenders, then.
Generally, yes. Then there's the Digital Operational Resilience Act, DORA, that became applicable from January 2025.
What does DORA do?
It imposes pretty detailed requirements on financial firms for managing their ICT risks, reporting major incidents, including strict timelines for notifying the CSSF stated rules, managing risks from third-party tech providers, etc.
Does DORA mandate opinions like MiCAR?
Not explicitly, no. But its requirements will inevitably filter into due diligence and compliance confirmations. Opinions on critical ICT outsourcing contracts or broader compliance opinions for banks or fund managers will likely need to consider whether DORA obligations are being met.
Okay. Anything else recent?
A couple of other points. There's the ESMA proposal to move the EU to T+1 settlement for securities, maybe by October 2027. Faster settlement could squeeze timelines for capital markets deals and the opinions needed for them. And the CSSF issued Circular 24867 in late 2024, updating technical specs for submitting prospectus documents, which is directly relevant for lawyers opining on those.
That's quite a list, heavily focused on digital finance and regulatory robustness again. What's your main takeaway from this recent activity?
I think the standout feature is definitely that intense focus on digital finance and technology driving new, specific opinion needs. MiCAR, DORA, the related CSSF circulars, they're creating demand. Regulators, following CSSF-stated approaches or EU guidelines, are using opinions as a tool to ensure proper classification, risk understanding, and operational resilience for new instruments and technologies.
So lawyers are having to grapple with new tech law.
Yes, Luxembourg lawyers are increasingly asked to opine on novel questions with limited precedent, needing a blend of tech law, financial regulation, and traditional finance expertise. It's pushing opinion practice into specialized areas, maybe leading to more of those reasoned opinions we talked about.
Beyond those specific new rules, how are legal opinions more broadly adapting to this whole wave of fintech innovation? What other trends are you seeing emerge?
The role is definitely evolving alongside the tech. One clear area is DLT-issued financial instruments. We mentioned the LuxEK guidance potentially requiring opinions for tokenized securities on its SOL platform. There's just a growing need for legal analysis confirming the legal nature of assets living natively on blockchains. How do existing securities laws apply? It's complex.
Right, and crypto asset classification generally.
That remains a huge area, even beyond the specifics of MiCAR arts. Is a particular token a security? A utility token? Something else? This is critical for issuers, exchanges, investors trying to navigate a patchwork of rules. Legal analysis, often formalized in opinions, is key. The source mentioned ESAs are still working on Q&As here, showing it's ongoing.
What about smart contracts? Are people getting opinions on those yet?
Not really as standard standalone opinions yet, but it's a potential future area. As self-executing contracts become more common in finance, questions about their legal validity, enforceability, how you interpret them, who's liable if they go wrong, these could eventually need new forms of legal assurance, maybe opinion.
And AI in finance.
Similar story. AI is being used more in trading, risk management, advice, raising novel legal questions about liability, bias, data protection. Again, not standard opinion territory now. But as the risks become clearer, new forms of legal assurance might emerge over time.
Anything else driving change?
There's also that increased global regulatory focus on substance and control, especially driven by AML-CFT rules and challenges around identifying the ultimate beneficial owners, UBOs.
How does that affect opinions?
It means opinions related to regulated entities or complex structures might need to look beyond just the formal legal standing and consider operational substance, actual control mechanisms to give a complete picture, reflecting these heightened regulatory expectations. Hashtag YC. Anticipated changes in upcoming legislation next 12 months.
Okay, so lots of adaptation happening. Looking ahead now, maybe over the next year or so, what's coming down the track that could further change the legal opinion landscape here?
We can definitely see several areas likely to develop further. Continued MiCAR implementation is a certainty. It's still early days. We expect more detailed rules level 2 and 3 measures from the EU bodies, ESMA, EBA, EIOPA, many applying in 2025. The CSSF stated approach suggests they might issue more local guidance too. So MiCAR opinions will remain a very active area.
Makes sense. What else?
AML-CFT developments are always ongoing. The big EU AML package is advancing, including setting up the new Central AML Authority, AMLA. This will inevitably lead to changes in Luxembourg's own AML laws.
How might that impact opinions?
It could affect the level of due diligence needed for opinions, maybe requiring more detailed verification of parties or, in some contexts, looking more closely at source of funds. The existing complexities around identifying UBOs mentioned in the source will likely persist or even increase.
Okay. What about ESG? That's huge everywhere.
Absolutely. Environmental, social, and governance, ESG rules are creating new demand. EU regulations like CSRD reporting, SFDR disclosures, the taxonomy classification mean clients need opinions on things like, is this green bond actually eligible? Does this fund comply with its SFDR disclosure obligations? Is our due diligence process adequate? It's a growing field for opinions.
Any changes expected for the fund sector specifically?
The ongoing EU reviews of the AI-FMD and UCITS directives could lead to amendments. If those core fund laws change, fund documents will change, and opinions covering funds will need to adapt accordingly.
Interesting. What about bigger picture things like the digital euro?
That's a longer-term project, but the digital euro project by the ECB is significant. If and when a central bank digital currency arrives, it will impact payment systems and infrastructure. How it interacts with commercial deals could create entirely new areas needing legal analysis and potentially new types of opinions.
And just general lawmaking in Luxembourg.
Well, the Luxembourg legislature is always busy. While there aren't specific draft laws aimed at changing transactional opinion practice generally because it's mainly market-driven, the source did mention a recent draft law where judicial bodies submitted avis juridiques. It shows the broader use of legal advice within the system, even if it's different from the transactional opinions we've focused on. The legal framework is always evolving.
It really seems like opinions aren't just reacting to rules after they're made. In some areas like tech or ESG, they seem to be evolving almost ahead of the formal rules.
Yes, I think that's a fair observation. It's a mix. Practice has to react to direct mandates like MiCAR's requirements, but it also evolves proactively in emerging areas.
Driven by client needs.
Exactly. Driven by client demand for clarity and risk mitigation where the rules are still forming, and by the need to make new, innovative transactions work. Remember, the original adoption of common law opinions here was largely a market-driven, proactive move itself. This dual dynamic reacting to law, anticipating the market, means practitioners have to stay tuned to both enacted rules and emerging trends to keep opinions relevant and effective. #V tax-related elements.
Okay, let's pivot slightly for this last main section, tax. It looms large in Luxembourg finance. Do these standard corporate and finance legal opinions we've been dissecting also cover tax advice?
That's a really important question for anyone involved in a deal here, and the answer is generally very clear. No, they typically do not.
So, standard opinions exclude tax.
Yes. It's standard practice for transactional opinions focusing on things like corporate capacity, validity, enforceability to explicitly exclude tax matters from their scope.
How do they do that?
Usually with very clear language right in the opinion document stating that no opinion is being expressed on the tax consequences of the transaction or any related matter for any of the parties involved.
So, if you need tax advice,
you need to get it separately. Advice on specific Luxembourg tax issues like withholding tax, VAT, the tax treatment of the entities or instruments is provided in a dedicated tax opinion or a separate tax memo.
prepare by who?
By qualified tax specialists, who could be tax lawyers or specialized tax advisors. It's a distinct area of expertise.
Does issuing or getting a standard opinion have any tax implications itself?
The source material doesn't suggest any general Lux tax implications, just from the act of issuing or receiving a typical corporate finance opinion. The tax issues always relate to the underlying transaction the opinion is about, not the opinion service itself in isolation.
So, the bottom line for you, our listener,
is that if you need tax advice on your Luxembourg transaction, whether it's about the companies involved or the deal structure itself, you absolutely must seek dedicated advice from qualified tax professionals. Don't expect it to be covered in the main legal opinion. #tag conclusion.
Right. So we have really journeyed through the world of Luxembourg legal opinions today. We've defined what they are, why they matter, unpacked their structure, those crucial assumptions and qualifications, traced their life cycle, and looked at how they're constantly evolving with new tech and regulations.
I hope we've managed to demystify them a bit. To summarize the key takeaways, legal opinions are truly indispensable tools in Luxembourg's financial and corporate world. They provide that critical assurance on legal status, authority, validity, enforceability.
Underpinning confidence.
Exactly. They underpin confidence and make a huge range of transactions possible. We saw their unique common law transplant, carefully adapted into the civil law system here. Their preparation is meticulous document review, assumptions, qualifications, often negotiation highlighting their role as significant risk management tools.
And they're not static.
Definitely not. Recent developments like MiCAR, DORA, that collateral law clarification are actively shaping practice, especially in digital finance. Regulators like the CSSF stated requirements show they're increasingly using opinions as part of their oversight. And looking ahead, emerging tech like DLT, ongoing focus on ESG, AML, these ensure opinions will remain dynamic and absolutely critical.
It's definitely not a dusty corner of law. It's constantly adapting, constantly relevant.
Absolutely. For anyone working in the space, law, finance, compliance, staying vigilant, staying adaptive is really key to navigating these legal intricacies effectively. And maybe a final thought to leave you with. Considering how vital legal opinions are becoming for managing risk in brand new areas like crypto under MiCAR, and how the process itself forces discipline and quality control on documents, it does make you wonder.
Wonder what?
Could that discipline process, the rigorous fact-checking, the explicit assumptions, the clear qualifications become an even more widely used framework? Could we apply it more broadly for assessing novel legal or regulatory risks in other fast-moving areas of finance and tech, even beyond the traditional context of just closing a specific transaction? Something to think about. #outro.
That was a really deep dive into Luxembourg legal opinions thanks to the detailed source material you shared with us.
We certainly hope this breakdown helps you feel more informed and more confident about this really essential aspect of the Luxembourg legal and financial landscape.
Absolutely. And remember, while we've covered a lot of ground, it is crucial to verify information independently and always consult with qualified professionals for personalized advice tailored to your specific situation.
This podcast contains content generated or significantly edited using artificial intelligence tools. All information is provided for general informational purposes only and reflects knowledge available at the time of publication. It does not constitute financial, investment, or legal advice. We recommend that listeners verify the information independently and consult with qualified professionals for personalized advice.
Hit that like and subscribe button. It was the Luxembourg Funcast for you today.